The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Hi everyone, Basil Chapman here. I'm sitting in for Larry. It's my pleasure to be here, and I do the show at noon. It's called the Tiger Technicians Hour, and I also have a newsletter called The Opening Call. So let's just get to some things. First of all, the 2-minute chart shows that earlier on at about 7 o'clock, there was a nice rally. Let me just also show you this. If you're new to my work, I'll go to that one. Yeah. So in the chart wave methodology, we try to identify the lowest low bar and then merely count each successively higher peak. It's really a very simple concept. When I used to hand chart, pencil chart with ruler and engineering paper way back, starting in the 70s and then 80s, before we got the computer charts. And then on the weekends, I used to study those charts that were sent out, those big charts, a huge book. What is it? Daily graphs or something here. And then I'd hand chart these notations. So basically in the Chapman methodology, if you can identify the lowest low bar and merely count each successively higher peak, and I alphabetize them, uppercase on the way up, and it can go to 7 higher peaks, A, B, C, D, E, F, G, but it's at that 4th highest peak, P, D, where my expression is other things can happen. That's the objective is to get from a buy signal to a buy mode, and that not guarantees. It assures you that there's a really good chance that you're going to go to at least 4 higher peaks. After that, then you have to use other techniques. That's number one. Number two is I'm only looking at 3 patterns: straight up, straight down, cup formation. That cup formation can also be a V-shaped formation, but it's the same thing. You're going from one point, pulling back, you're going back to that point. How you deal with that retracement is important, and the arch formation, which is like an inverted V as well. So the arch formation going from one point, rallying, coming back. How do you deal with that? If you take it out, you get this pattern, straight line down. It looks exactly like a lowercase h with a little sloping back there. And if you take out the left side low, you can keep going lower. And if on the right, it's green, because if you take out that high after that cup of V-shaped formation, you can keep going higher. So 3 patterns: straight up, straight down, cup, arch. And then, of course, you can get a mix, the old combo. And then there's a pattern we've been looking at. It's been very successful for us. It's a pattern I discovered a long time ago. I always had trouble defining it. I like to use terminology that is kind of explains what we're looking at. This is called the Chapman falling axe formation. You keep going higher, you keep bumping into resistance, so it creates a trend line up. And then you stop and you reverse at either a P, D, E, or F, and then you make lower highs and much lower lows. And then all of a sudden, it starts to form a base. And that base says, oh, if I rally and take out that trend line down, I could have a Chapman wave 1-to-1 parallel extension. So that's the difference between when people say 1-to-1, A to B equals C to D. My theory has been for a long time, very long time, that if you can do it with speed, in other words, the angle is the same, that's really important. That takes me to the next thing that I call the 1-3-6 rule, where if you consolidate for one bar and then go to the next high or the next low, that's fabulous. If it's 3, that's still good. If it's 6 bars and then you take out the high, you basically restart and you have to kind of recalculate. All right, enough with that. What are we looking at here? We're looking at the arch formation. Took out the left side low, struggled, went to a trough C. The MACD, moving average convergence divergence, is cross positive. Stochastic gave a nice turnaround signal. On balance, volume is saying, you're struggling. But it is going higher, and this orange line here is the 200-period moving average. That's the 2-minute to 5-minute made at peak D, and the 10-minute made at peak F. A more serious pullback is usually implied with an E or F, and that's what we've seen here. And now we're trying to restart. All right, let's get to the nitty-gritties. Where are we? Well, if you look at the Dow, I'll just go for the moment. I'm going to the actual index, the Dow Jones Industrial Average, rubbish. It's not that. It's this Dow 30. It's got no more relationship to industrials than so 27,580 was the high on the 8th of June. The all-time high is 29,568, plunges down to 18,213 and 39%. That is a whopper of a correction. And then what you can call it, let's call it a correction for now. Because look at the speed with which we've come back. This is called the Chapman Wave Inside Track Repellent Zone. Look how the down the weekly chart has struggled to break that resistance level. Same thing in the daily until the Dow can break above 27,100. It's kind of trapped for now. Okay, that's the Dow. If you look at the YM, that's the futures. The Dow futures are up 80 right now, 26,402. It would be the same thing. You've got this trend line down, but we're holding above the 14-period moving average. The MACD has only gone slightly negative, and stochastic's quite good, actually. It's not bad at 72%, and you got the same thing here. If you look at the E-mini, so we're going to go to, is this the continuous contract? Yeah, let me go to the ESU for the moment. That's a little bit better. And that went to a parallel alternate count, G/C at 3284.50, all-time high. Well, when you think about where we are, and it took just 1, 2, 3, 4, 5 bars to get to that 3284 level from a base of about 3190, look, we've come back just for 2 days. And this is pretty good action when you think about it. So the day is young. Let's see what happens when I've set you subscribers to my opening call for today. And I use the 120-minute chart as well. Let me show you what we're looking at here. So here's 120. If it takes out 3223.75, if it goes to 3224, that begins a leg B. The MACD is good in the 120-minute chart. The stochastics actually improved a lot. It's at 79%. So what I'm looking for here is that there's a lot of uncertainty, obviously, in the market. I'll talk about that now when we go to the gold chart. But what we're looking at is the Dow has held better on the way down. It was lagging on the way up because the QQQ, look, the Dow made its high back in, let me just go back in February of this year. The QQQs went to a new all-time high. They went to 269.79, the Invesco QQQ Trust Series, the NDX 100 trading vehicle. Then it made the dreaded H. Look, there's that red, I showed you before, that lowercase h, call it the dreaded H, because if it takes out the left side low, in this case 252.76, and keeps going down, that's going to be really tough. But if it bounces back within two bars, this is actually not even 1 bar. Yesterday was the low for the move down since the all-time high, and now it's trying to rally. It's up $1.88 to 257.44. So it's very much inside the H pattern. That's good. And this is 258. Is that an 806? This is 258.79 is the 14-period exponential moving average, which is still, now this is a rule of thumb for me. If the green 9-period exponential moving average is way above the 14-period moving average, that is showing intrinsic internal strength. And that's really what I'm looking at. So I'm not sure yet whether we're about to start a bigger correction or whether it's just a sideways move. Now, let me run these quickly. So you've got the QQQ. I wanted to show you something really important. We'll go to it right now. Gold is up 34 at 1931. I showed subscribers to my opening call. I sent this out this morning with my newsletter, and not the weekend charts. This is one I just suddenly came across. I'd done all the notation. I'd said that there should be a move in 2020 to 2021 up in the high that was made in September of 2011. I can't believe I missed it.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
So a pattern that I often discuss is when that lowercase h becomes a lowercase m. In other words, there's a second arch. And then all of a sudden, the technicals start to improve and the price starts to move up. And better yet, it doesn't take out the left side low in gold. It would be the continuous contract, little tiny doji candle of December of 2015 at 1187. Of course, the price changes because it gets smoothed out, but that is the date and that is the chart formation. You can see a cup formation form, in this case, a huge bowl formation. And look at this. On the way up, there were these left side, right side price time match points where it took out. And what I had drawn some time ago is a Chapman Wave inside wedge target dash green line. And I thought, it is just so far away. I just kind of ignored it. And look, all of a sudden, it's right there. And it says by September of 2020, we should be touching the high that was made, well, actually, this is a different one. Now I'm going to make this. Yeah, that's right. And this goes back all the way to 2000. Let me show you. It goes back to the high that was made right there, September of 2011. And that price, of course, it gets smoothed out once again. So I've got 2098.8. And that would be the target by September. We're just about to hit August. And then there's September within 2 months. That is incredible. But look, I'm always fascinated about this because you get this upside down or the regular way going up. If you think about all the points that were made that were either positive or negative about gold, and you look at the steadiness of the move, yes, there's an acceleration now, but there was an acceleration down from the 2012 high. Very quick, but in the total number of bars, look, we've almost matched, but I haven't matched to the low. I like to make it to the low. We didn't do that. I don't think I have the chart anymore. It's just a beautiful chart that goes to the 2000 low. I think it was 1999 or it was 2000 low. Just a beautiful a bowl formation that eventually broke out, and it was almost to the exact month when it broke out. Look at the dollar, the way the dollar is very weak right now. But look at this. I'll show you something very interesting. Look at this pattern in the dollar. And I'll have to squeeze this so you can see. Look, isn't this interesting? From the low that was made back in April of 1995, this doesn't get smoothed out. This is the price of 80.05. I remember being on air the very minute that it broke that level, and I just couldn't believe it. And that was, look, it broke it right there, went to 74.48. Sorry, it was right there that we started to break it right there. And that was that beautiful arch formation with the left side, right side price time match. So these things can take a long time, and they unfold. And look at this beautiful cup formation, bowl formation in the dollar, going all the way down to 70, makes the H pattern that goes to an M pattern, and then curves around and screams up to 103.82. And now it's pulled back very sharply. So these patterns can last either just a very brief duration. We just saw this arch formation in the 2-minute chart, or it could be multi-year, multi-decade even. So the patterns are really important. So it's fascinating because Larry uses only certain things. He uses the Fibonacci, he uses these Gartley and these butterfly patterns. They're very comfortable with that. A couple of other things that he includes. Everybody has their thing. And I love it because and he always makes his joke about when the 200 crosses the 400. But if you use something and you use it consistently and use it well and use it over and over and over and it works, as I always say, you can get out of bed on the left side every day, and the day you get out of bed on the right side, if you're able to do that, and that's the day the market tanks, and you use that as an indicator, good luck, as long as you do it consistently, and it rewards you consistently. All right, let's get back to our story. I've got to do a bunch of things here. I want to show you that the QQQ, that right now is trying to rally. It's up $1.86, but it made a peak E at 269.79 on the 13th of July. Then it did this pattern, the H pattern, but it's also the 1-to-1. Look, it's even a parallel move. When it went from 269 down to 252, bounced up to the 268.9 area, and then it plunged to the Friday low in the 251s. Now we're going to see, is it going to be a series of lower highs and lower lows? Is the tech sector about to take quite a bit of a breather? Or is this really important in the sense that, yes, there's a rotation, and all that's happening now is that the tech sector is rotating while other sectors are starting to form some kind of solidity. Look at this. W is, well, let me go here. W. This is a continuous contract for wheat. It's made a peak C. It should attempt at some point to get to a leg D above the continuous contract high of 551 and 3/4, made in the 15th. Consolidating here. Otherwise, it's going to make the H pattern come down. But look, the technicals are pretty good. Look at H, soybean. This is the soybean continuous contract. It's made a really nice move. Now, you remember I showed you that pattern, that falling axe pattern, where if you break the declining trend line, that's this dashed line here. In fact, I like to nowadays, just so people ask me, can you make it a little bit clearer so we can see it? I'll make it a little clearer there. Straight line, and here's the lower one. Straight line, there it is. So we've already broken above this high. So this is gray leg B. Why is it gray? Because the MACD is just okay, stochastic's improving. But if there is a push in soybeans to the 906, we're at 903/4 right now. If we can go to 906 in the next couple of days, I'd say by Wednesday, there's a real good chance it's going to try for the high of the 5th of 909.5, and then it should suddenly tackle the high that was made of 909.25 right there. Was that on the 6th? Yes, on the 6th of July. And that would be your 1-to-1 expansion to the upside. But it's already made a peak D in the weekly chart, so it could have a rest. So I'm just saying that there's a chance that these grains are going to start to move. And we might see some inflation. So the corn is down at 326, down a quarter. It's attempting to turn up, but if corn, instead of breaking under 320 in the next 3 to 5 days, actually has a bounce, just a bounce, doesn't have to be a big move, but, well, it'll be a big percentage move, to 331. It's only 5-6 points from here. That'll be really important because you will start to see a cup formation. Now, talk about a cup formation. Let's see what a cup of coffee is looking like right now. Coffee. Let's go to KC, continuous contract. I don't trade these. I notate them all the time. It's part of my vernacular that I look at. Look, there's your cup formation. Second W went even higher, went right to the 200-period moving average. Got a bit of resistance up $1.25 at 109.65. Leg B in the weekly. So we're watching this. We're looking at CC, which is cocoa. It's in a leg C. CC's in a leg C. We're making a cup formation. Nice action. When we get back, we'll have the open of the market. We want to be looking at a lot of things. When I get back, we'll also start looking at what is working today and what is kind of stalling. And will gold start to make a little bit of a top here, having extended like this? We'll talk about that. I'll be back. Basil Chapman sitting in for one and only Larry Pesavento. I'll be right back.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, Butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back, and I'm Basil Chapman sitting in for Larry Pesavento. I do the noontime show, the Tiger Technicians Hour, and I'll be doing it today. You'll see more of these notations. If you're interested in these arch formations, look, the Dow is down 23 at 26,446. Now, I said earlier, the Dow is not industrial anymore. It is the Dow 30. I mean, you can't call it an industrial when you have Visa or you have Microsoft. Maybe Microsoft, in a sense, is part of the new industrial age. And Caterpillar, of course, is in. But CVX, Pfizer, no, it's now the Dow 30. and United Health. So what's really important about this is that the Dow has held very well. Now, let me go back to that technique that I was using, and maybe it'll be of interest to you. Look at the way the 9-period moving average, this green line right here, is so much higher than the black 14-period moving average. Look at the way it's holding so far in this Chapman Wave inside track support zone. Look at the way the MACD has just turned negative right now. That should be a negative, in a sense it is. But, and the stochastic is at 75%. I say under 80% is starting to weaken. Over 80% is very good. But even more importantly, what I think we're looking at here is that there's a rotation going on, and that rotation is essentially saying that there are sectors that are going to have held well, but are holding well and might even actually start to improve. At the very same time, there are going to be sectors that are very weak. If you're looking at an Amazon, look, Amazon had gapped up today. It's up 28 to 3,038. It made an all-time high of 3344.29 back on the 13th of July. There's that H pattern. And it's taken one day to break under the left side low, and now it's bounced back. And so that means that you can make another arch formation. But it is a D. Remember D in the weekly chart? That's something I take quite seriously. So if all week we don't go above 3344.29 to extend to a leg even, in fact, we stay in a range and we start to go slightly lower, it says be prepared that Amazon, as fantastic a company as it is, and of course this is the company that's benefited the most through this pandemic, we might be seeing, in fact, if you look at the numbers, we might start to see that even with the scary stuff that we read about, people are starting to socialize. People are starting to go out a little bit more. The roads are a little bit busy if you've been out on the roads. So maybe what we're looking at is that we do technical analysis. It says don't listen to the news, because actually internally there's a little bit better news that's being shown. And we'll see that. For instance, Apple, the Apple store here in the Chestnut Hill Mall, when we've just very rarely been past it over the last many months, has been really empty. Never seen it empty before, but it had been. Last week, Thursday, I think, one of the days we were there, had to get something, and it was not full. There was a little bit of a line, but it was actually, there were people at all the benches that they have. So it's saying that perhaps we're going to see, on the one hand, some technical improvement, but the news is going to get worse as talk about the deaths. And I spoke to someone in the medical profession just the other day, and they said the number of deaths that are being signed off as corona-related is way above the actual number that is specifically corona-related. I don't know how to verify. That's just anecdotal, but wow, that'll be quite something. All right, so let's get back to our story here, because what we want to look at here is how's the IWM, the Russell 2000, how is that faring? Is money going to the small caps? Is it coming out of the XLK, S&P Select Tech Sector Spider Fund? Well, they both have very similar chart patterns, but it's only a leg C in the weekly chart, and we should get to a D. All-time high at C, very unusual for a weekly to tank and break down without going to a D. So all I can say is I see internal strength. I don't see a big smackdown just yet. I think it could come later, and it's going to come for, I think, political reasons, and that's why in my daily show, more and more I'm going to start including political stuff, and it's got nothing to do with who you should vote for. It has to do with the relationship of the market to what's happening, and that's all. So this looks to me, in fact, I'm going to make it right now. This is a peak G in the Chapman Wave in the, there you go, peak G, and that now I can put a down. No, this is now going to be the second signal. There it is. usually I start off with a down arrow, and that usually almost always signals that there should be a pretty serious move down. But sometimes there's still enough residual strength to have a sudden spike to the upside. This is like a right arm extension, and it went to a peak G, just over 110, the XLK, and now we've seen it pull back to the 103s, and it's trading at this moment at 106.09. It's up very nicely. It's gapped up very nicely. We'll see if it can hold that. I suspect somehow or other we will get that D. Talking about a D, let's go to, I hadn't finished, so I wanted to go through these. Let's go, now let me do this as we always do it. The Dow, IND, trading down 11 at 26,456, holding very well, having a high-level consolidation, but it has been making lower highs and lower lows, and that says absolutely imperative that this week the 26, it's at 26,450, 26,200 must hold. Any close below 26,200 starts a signal in the daily that says, uh-oh, now you could go lower. If it holds nicely, it can go there, but on a closing basis, that is. Let's look at the S&P, and I showed this to subscribers this morning. See, S&P also holding well. Look at that green moving average above the 14-period moving. That just shows internal strength. To get that green to go under the black line to get a sell mode, you would have to see the S&P at about 3162, about another 60 points, 50, 60 points lower. Because that's what it would take, and it would be speed. It will just waterfall cascade to the downside. That would do it, because you've already got the MACD turning down, and the stochastics under 80% to 76%, but it's holding quite well. The QQQ we just did, give you the levels to watch. If at any point in the next 3 sessions, anytime this week, there's a close under Friday's low of 251.32, very negative. And that's going to impact the weekly. But the weekly is saying, wait a minute, I'm only at a peak C. I should go to a D. You can have time. You can have time and price, or just price at a peak C. And as long as the technicals are holding well, you should then have at some point have a big spike to take you to that leg D, and that would be above 269.79. Let's look at the IWM just one more time here. IWM made this recovery high at about 150, trading now at 145.71. It's down 38 cents, not that strong. But look, this is a pattern. Whenever I see this pattern, what do? I grab the outer levels, I draw this in, and it says trapped, stuck. The IWM is just stuck in a range, and it can stay in a rectangle formation. Remember, I did a webinar on Thursday night. I discussed rectangles, narrow rectangle, and the wide rectangle. This is a wideish rectangle, which could turn into a narrow one, just historically because of the number, and it could just be trapped, just stuck in this range for a little while longer. Basil Chapman, Basil Chapman sitting in for Larry Pesavento. I'll be right back.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Hi, folks. We're back. So on Wednesday, I think it was Wednesday of last. It was a Thursday or Wednesday of last week. We had a caller who wanted to know about WPD. What was it? It was Wheaton Precious Metals, WPM. And it was trading, oh, that's right, it was right there. Whatever day that was, that was Thursday, that was Wednesday. So I suggested he was in WPD. It was trading at the time, I think it was trading at, I think it was 52.78 or something like that. WPM is the Wheaton Precious Metals, and he wanted to know what he should do. He had options for Friday, and I said, you know what, just for money management, take a tiny little bit off if you can right now, and if it pulls back, you might want to put that right back. Just have levels that you're comfortable with, because it looks to me like Friday could have that leg that should take it above the high of 50, well, it turned out to be the high of 52.64. So it pulled back sharply. It actually went to 49.81. And then Friday, it opens at, it had a low, round number low of 51. I love those round numbers. Opened at 51, round number low 51, and screamed to 54.91. And I said to him, it's a pity you haven't got the August, because it looks to me like this thing's going to go even further. Well, today, it's at 55.89. The gold and silver, I mean, on an absolute tear. This is an acceleration phase. Had a question that Den also the other day, had a question about, we were looking at two stocks, I think, and the other one was VGZ. VGZ. And was I don't remember now what it was trading at, but it was around about 103, 107. I said, all right, the person asked, what should I do? Which one should I buy? And I said, this is the one that I like. And I suggested a small position, and it went from that level. I just texted now in the den. He said, does VGZ qualify as a screamer? I'd say up 5 or 6%. Yep, that's a screamer. That's exactly what we look at. So I like this. You suggested a tiny buy on your show last week at 101. Now at 1.29. Bravo. Yeah. So this is still, I think this is a leg C, and I think there should be a nominal new high. I think it's getting kind of toppy in the sense that just chart-wise and everything, but the stochastics at 86% and steady. That's great. And the on-balance volume is very strong. It's a tad too high, but the MACD is still very strong. So I think it's going higher. So I'm going to say it's the same thing. If you have enough, take a little bit off now, money management, and I try to hold on. I think it's got another little bounce to go, and then I think you've got to be very careful. So within 3 days, I think you could see gold and silver pulling back somewhat. That's what I'm looking at here. And the dollar, if you look at the dollar in this acceleration to the downside, look at this. 1, 2, 3, 4, 5, 6, 7 candles, big red candles. I think the dollar's getting ready for a bounce, but that's all. I think it bounced because there's a trend line that goes way back. There again, I'm looking at a very long-term chart. This trend line really goes back far, and it's on that trend line right now. I don't know if it's going to go back to 90.81, the 200-period moving average. We went long at 90.07 back in April of 2018, held it all the way, took a little bit off on the way, but really held it. It went to 102.99, and now it's down at 93. Is it going to go full circle? And there was a reason for it. I don't have to discuss the reason right now, other than to say my longer-term outlook said that the dollar could come back as an icon of the success of our economy. That was before coronavirus. I don't know if that's going to be, I don't know if it's able to do that. But I think the market still has a chance to go to all-time highs. That's meaning the Dow, the S&P, even the IWM. And I think that should be reflected by the dollar. We'll see. But in the shorter term, ugly. Euro, EUR, USD. Look at the euro. Questions? Did I have any questions coming in? Yes, metals, Paul says, precious metals are soaring. It's rocketing. It's more than soaring. It's rocketing. Look at this. Euro rocketing. Look at this. The green bars, the Dow had the dollar had the red bars. This has the green bars. And when you get an acceleration in the characteristic of the candle, and the characteristic says, I'm expanding, and I'm going to recovery highs, there's a point that you're saying, now the layperson, that doesn't mean to say the public, it just means the people who don't usually trade this particular vehicle are just climbing in, and that makes me a little nervous. And also you've got a leg D in the weekly chart. So that says to me, this is where the real big hitters would go in 300% right now because it's on a roll. This is the place to be. But in terms of money management for regular folk, I'm saying this is where I would start to lighten up a little bit and prepared to put that money back, and I'd have 2 places to put it back, somewhere in maybe the last 3 candles worth. I put it at the bottom there, and then I'd have something crazy that's like the last 8. In other words, 1.14 is the next level. So 1.15 or something like that is at 1.17 right now. So it's just screaming. It's up 0.010. Look at the USD JPY, the yen. The yen is ugly, not good. And that's the dollar and the yen often do the same thing, not the same percentages, but kind of the same direction. All right. Now, the other thing that I was looking at is, I just wanted to mention this again. I'm watching this closely because I think that the grains are starting to at least find some kind of support. And I'm beginning to think that if we're going to look at inflation, you've got now inflation in real terms because of gold, silver, and the precious metals. SLX, steel, is a precious metal in a different way, and that's just holding very nicely here. But at the same time, platinum is screaming. Look, weekly A, B, leg C above the 200-period moving average. Every time it's gone above, it's trying to pull back. This move has technicals that are saying it could hold a little bit better this time. The low is peak A, B. This is leg D. Again, we've got a D showing right here in platinum. So on the daily chart, it's saying, yep, getting a little bit overbought shorter term, but the technicals are still very strong. What am I missing here? I did silver. Did I do silver? Silver's doing spectacularly. Leg D in the daily. Big candle. Had a kind of a rest period on Thursday and Friday, and then boom, up. MACD's good. Stochastics at 90%, really good. Leg C, only a leg C in the weekly, this should go high, but a single leg A up in the monthly chart, a monthly chart A, which says you should still go to a B, C, and D in continuous silver contract. Wow. I don't know, that's really quite remarkable. However, it's how it holds into the second week of August. I think that's going to be important. But this is really good. It's broken all the resistance levels going back quite a few years. So this is important. It has a lot of resistance in the 25s. I think it's 27s, and that's the high of June, of August of 2013. Very nice action. I'll be back in a moment. Oh, we've got one more segment to go. Basil Chapman sitting with Larry Pesavento, Russian Weekend Everywhere. And I wanted to show you that there's internal strength. Let's just go to those minis as we're about to go to the break. Yep, this is leg A, B. In the 2-minute chart, leg A in the 5-minute chart, leg A in.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us, and Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
Wow! If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So there's a pattern that I've been discussing with subscribers for a long time. It's a pattern that I've identified for years, and I try to label my patterns in something that's just a practical way. What it says is what it is. Chapman wave, cup and ladle. Looks like a ladle because you break out of the cup formation before you get to a D, and that says you should go to at least a D. It's really positive. It's not like a cup and handle, which is questionable. So there's a pattern that I talk about, and I decided last week I'm going to call it the gravy cup. Why? Because sometimes you pull back very sharply, like in the Dow right here. You pull back very sharply, and then it takes a long time. It's like a rectangle formation that's kind of lopsided. And yeah, you can even see it in this pattern here. It goes sharply down, and then it starts to kind of make a cup or a V shape, and it starts to move higher and higher. It goes to A, B, C, D. And I call it the rectangle formation, but the actual pattern starts off like a cup and then it gets lopsided. So you've got that right here. You've got this on the right instead of the left where you've got the gravy cup handle and then this is the base and then it to the spout. This is the other way around. Here's the spout and there's the handle. So this says that it's taking out at new recovery highs. It's up 19.50, the E-mini, the 2-minute chart. And this is only a leg C. And I made this a B because it's called the phantom peak in the Chapman methodology. I only use it where there's certain characteristics. And I want to be ahead of the game, saying that maybe it doesn't go to a D, it goes to a C, and then it pulls back. Where's a legitimate place to put this? So we're going to see why. Because if the E-mini, and here's the 10-minute chart, if the E-mini after 2 o'clock this afternoon has been able to make the steady rise and is holding about a plus 12 or more, there's a really good chance you're going to get a very good close. If, in fact, it turns around and gives back the gains, like this could be a single leg A failure pattern, and all of a sudden we turn around and you see it at under 32.15, and it's like 1 o'clock, and then by 2 o'clock it's only up 7, and then it starts to shrink. That's his nervousness going into Tuesday. But it's really positive. We can hold strongly after 2 o'clock because it says, hey, at that point you've got 2 hours to go for the close. So have a great day. If you want to go to my show, Tiger Technicians Hour, coming up at noon, another 2 hours, I'll be back. So have a great day. Hope to see you soon. Otherwise, have a good day. We'll be back tomorrow.